top 11 dividend stocks that you have to buy now. These are stocks that have been continuously paying and increasing their dividend for 55 years. In case you didn't know this, there are actually some stocks that have been continuously paying and increasing their dividend for 55 plus years. And that's what I'm going to show you in today's video. I'm going to show you all the 11 dividend stocks. Let's go. What's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel, also known as Underdog Investing Stock Market Mastery. Before we get started, I do want to remind you to subscribe to the YouTube channel. We're fastly growing this YouTube channel and we're bringing a lot of value to subscribers, amazing financial content for them to improve their financial lives, as well as I'll teach you how to become a more profitable investor in the stock market. That is our dedication and our sole purpose on this YouTube channel. So make sure you subscribe so that you get all sorts of inside information. And I do want to share some amazing referral links that you can take advantage of. It's basically free money or free stocks on all of these platforms. So for example, for M1 Finance, a brokerage that I absolutely love, you get fractional share investing and automatic dividend reinvestments. You get free $20. All that you have to do is just sign up for it using the link down in the description and deposit $100. After that, you'll get your $20 that you can choose to invest in whatever stocks you want. And then for Robinhood, they are actually offering a completely free stock as soon as you sign up. So this is amazing. You basically get a amazing stock. It can be random, so it can be Facebook, Apple, or any stock that you might want. And even better, Webull gives you 2 free stocks. Yes, you heard me right. So get yours now. The link's in the description so that you can get 2 free stocks as soon as you get started using Webull. And they have an amazing referral program. So if you refer another person, once you have your account, they'll give you 2 free stocks when that other person signs up. So no reason why not to do it. Take advantage of it now. The link is in the description for you to get your 2 free stocks. And then this Discover secured card. I use this every single day. I get 1 to 2% cash back on every single purchase, and you can get it as well. And for you, they're offering you a $50 sign-up bonus. Alright, so here we go. 11 dividend stocks with 55 or more years of payout growth. That's what we're going to be talking about today. Let's go ahead and get started with number 1. Illinois Toolworks, ITW. This has a market value of $48.1 billion, dividend yield of 2.8%. It has 55 years of consecutive annual dividend increases. The analyst opinion right now are 3 buy, 0 overweight, 14 hold, 2 underweight, and 4 sell. We're going to discuss the technical analysis of the stock as well as the dividend performance throughout time. Let's get started with the technical analysis. So let's just search for the stock performance using Yahoo's charts. And I always love looking at the max chart because the max chart is going to tell you what the actual performance has been throughout the history. So since it started in the stock market, there's no reason why you should invest in any stock without looking at the performance of the max chart. So you see how it was so cheap before, and slowly throughout the years, even through recessions, it always continues to go up. So no matter what buying point you get in, you're always going to be up on your position over time. That's what I love about the stocks. They're consistent and they continue to pay that dividend yield. And they're just very, very good, safe stocks that can withstand recessions and basically survive through any economic circumstance. So let's talk its dividend performance. So Dividend.com, a very good website for analyzing dividend data, shows that it has a 2.38% dividend yield, annualized payout of 4.28, payout ratio of 53.69. That's actually pretty good. You'll find a lot of stocks that have a payout ratio of 70 and upwards, which is very dangerous because it means they're spending all their money for dividends. Dividend growth 56 years. So very good stock dividend data. Now let's look at how much they pay you per share that you buy of this company. So it's going to be $1.07. And as you see, they're constantly increasing it. So you'll be paid more the longer you keep the stock. And usually this stock continues to raise it because they kind of have pride of being a recession-proof stock that continues to pay and increase their dividends. So they're not gonna get rid of that status. So what this company does is it produces car parts, restaurant equipment, and more. It dates back to 1912. Its dividend isn't much younger. The company started delivering regular payouts in 1933. Can you believe that? That's a long time. ITW operates in 57 countries and boasts more than 17,000 granted and pending patents. So it has a lot of ownership of intellectual information. Its brands includes the namesake Illinois Toolworks, as well as Stereo dishwashers, ACME packaging systems, and Miller welding equipment. The company's most recent dividend hike was a 28% raise in August to 88 cents per share, and investors can expect more improvements in the future, considering ITW sports a healthy payout ratio of 46.8, which means it's spending less than half of their income for dividend payments. Now for the second stock, Colgate, market value of $56.7 billion, dividend yield of 2.6%, 56 years of consecutive annual dividend increases. This is amazing. The analyst opinion, 6 buy, 1 overweight, 15 hold, 0 underweight, 3 sell. So CL is a consumer staples mainstay whose brands include Colgate dental products, Palmolive dish detergent, Speed Stick deodorant, Irish Spring soap, and Morphe wood cleaners, not to mention several other brands that are popular in international markets. In fact, the company delivers the vast majority of its sales outside the US, so it's not very US specific, which is kind of good because it's diversified, but it means it could also expand here. Though that has been a problem of late, a stronger dollar, stagnant demand in key overseas market, and higher input costs have been weighing on Colgate's results. That's among the reason Kiplinger listed Colgate among 5 stocks to sell in 2019. Still, Colgate's dividend, which dates back to 1985 and has increased annually for 56 years, should survive. The hikes themselves haven't been very generous of late. However, the company's most recent dividend raise, announced in mid-March, was just 2.4% to 43 cents per share. That follows a 5% bump in 2018. Still, it's a recession-proof product, and its decent yield may make CL worth a look once the company navigates its way out of its current quagmire. So basically, if you haven't heard of Colgate before, you've been living under a rock, because they have a very dominant brand on the dental market, and as well as other products that every consumer buys, even if you don't realize it. And let me ask you this: when are people going to stop brushing their teeth? Do you think they'll stop brushing their teeth in 10 years, 20 years, 40, 50 years? No, that's something just the same as eating. When are people going to stop eating? They're not. So you might as well be investing where companies are going to be continuously making money from. Even if it changes, just buy into the new company. But Colgate is a very dominant brand and leader in this industry, so you have to be investing where the money is. So let's analyze the stock analysis, the technical analysis, and the dividend information. Alright, so let's look at the Yahoo Finance chart. And once again, let's look at the max chart. That's the best indicator of the performance of the stock. Never make a buying decision based on a 6-month chart, 1 year, 5 years. So let's look at the max. So since the beginning, very cheap stock, and has slowly grown over time, which is what I love seeing. You want your money to grow, and this is what this stock will provide for you. You want to see uptrending patterns that are always making higher highs throughout time. So any buying point you get in, you should make your money back and more. Let's look at the dividend history. By the way, you should be doing this for every single dividend stock you invest in. You want to make sure it's reliable, safe, and has good growth. Dividend yield of 2.43%, annualized payout of $1.72, payout ratio 57.66, which is pretty decent. The dividend growth of 56 years. It's amazing how long these companies have been continuously paying a dividend and increasing it. So it pays you about 43 cents per share that you buy of CL Colgate. Now let's look at the next stock. Alright, so this is the third stock, Johnson & Johnson. So this is a big company that is behind a lot of products that every consumer buys. It has a market value of $368.7 billion, a dividend yield of 2.6%. It has 56 years of consecutive annual dividend increases. The analyst opinion is 7 buy, 1 overweight, 9 hold, 1 underweight, 0 sell. So, Johnson & Johnson, founded in 1886 and public since 1944, operates in several different segments of the healthcare industry. Johnson & Johnson is best known for over-the-counter consumer products such as Band-Aids. You never used a Band-Aid? Let me know if you haven't, because these are the manufacturers of Band-Aids: Bengay, Rolaids, Mylanta, Listerine, and Tylenol. Have you ever used Listerine, Tylenol? However, it also has medical device business, as well as pharmaceutical products such as autoimmune drug, Remicade, and anticoagulant, Xarelto. I don't know how to say that. The consumer products division has J&J embroiled in high-profile litigation over allegations that its iconic talcum powder is linked to cancer. So this is something that might be dangerous for the company, its reputation. But no matter how that turns out, it shouldn't affect those who count on J&J's dividend stock performance. Let's go ahead and analyze the stock, the technical analysis. One of the best indicators you can look in any stock. Basically, your money's going to grow how the performance is. So if you look at the max chart, it's always making higher highs. So you'll see this consistent pattern, and you should not have any stock that is decreasing in value over time, only increasing, because your money's going to grow based on this performance. If it's going down, your money's going to go down in value. You want it to go up, and that's exactly what the stock provides for you. But always do your own research. I'm not telling you to invest in any of these. I am just recommending them, but always it's your decision, because your profits are your profits, not mine. Your losses are not my losses. So now let's analyze the dividend history. Here we go. J&J, dividend yield of 2.56%, annualized payout of $3.80. Payout ratio is 41.72. Very, very, very good. Dividend growth of 57 years. I love that payout ratio. It's a lot less than most stocks, so I really like that. It means that it has a lot of room to grow and increase your dividend payout. A payout of 95 cents for every single share that you own of J&J. Let's get to Lowe's, the fourth stock. This has a market value of $84.9 billion, dividend yield of 1.9%, 56 years of consecutive annual dividend increases, 19 buy, 4 overweight, 10 hold, 0 sell. 19 buy, that's amazing, that's a lot. When it comes to home improvement chains, Home Depot, a member of the Dow Jones average, gets all the glory. However, number 2 rival Lowe's is the superior payout grower between these two DIY dividend stocks. Give the steadily rising dividend at least some of the credit. Lowe's has paid a dividend every quarter since going public since 1961. That is amazing. And that dividend has increased annually for more than half a century. Lowe's most recent hike was 17% jump to 48 cents per share, announced in June 2018. Analysts expect Lowe's to deliver average annual earnings growth of 16% for the next 5 years. And that's thanks in part of changes meant to help expand profit margins. Alright, so let's look at the technical analysis. And the performance doesn't dictate how the stock is going to do in the future, but it pretty much tells you that whatever the past is should repeat itself, and it should continue on its trend that it has been showing for a long period of time, ever since the history of the company when it went public. So this is a 5-year chart, max chart. There we go. So as you see, this stock is slowly growing over time, which I love. You're always making higher highs, so anytime you would have invested in this company, you would have made money throughout time. And that's what I love, and as long as you keep on buying stocks like this, you're going to make a fortune in the stock market. So make sure you do your research before investing in any stock. If you don't feel comfortable investing in any stock, you shouldn't. If you don't understand any stock you're investing in, you shouldn't invest in it. Only invest in what you understand and trust. Alright, so stock dividend data. 1.84% dividend yield, annualized payout of 2.20, 32.87% payout ratio. Did you see that? That is insane. That means the company can grow its dividend for many, many years to come. That is very good. And 57 years of annual dividend increases. Now let's look at how much they pay per share. 55 cents per share. This makes me want to buy like tens of thousands of the stock. This is amazing. I'm definitely gonna go ahead and invest a lot of money in the stock now that I saw this information. That is great. Great. Alright, number 5th stock, Coca-Cola. You never heard of Coca-Cola? Have you ever heard of someone drinking this stuff? The $194.8 billion, dividend yield of 3.5%, 57 years of consecutive annual dividend increases, 9 buy, 4 overweight, 12 hold, 0 underweight, 0 sell. Coca-Cola has long been known for quenching customers' thirst, but it's equally effective at quenching investors' thirst for income. Do you have thirst for income? Then invest in Coca-Cola. The company has paid a quarterly dividend since 1920. Were you even alive in 1920? This stock has been paying dividends before you were born, and those regular income checks have increased regularly for the past 57 years. Coca-Cola's core business has been challenged for some time. Due to the products they sell, a lot of cities are trying to curb consumption of soda, so they're implementing a lot of taxes for consumers that buy these products. However, Coca-Cola has responded by increasing more bottled water, fruit juices, and teas to its product lineup. In addition to the namesake Coca-Cola, it also has included a lot of sports names such as Powerade, Simply Orange, and Vitamin Water. And also in January, Coca-Cola actually acquired a company that is called Costa Coffee. And this brand is popular in international countries, so you probably never heard of it here, but a lot of consumers drink this brand in other countries. Alright, so let's look at the stock performance. And this is actually one of Warren Buffett's largest investment, KO. Let's look at the max chart. So yeah, just as we expect, a growing pattern, slowly growing over time. It did kind of reach a high in the almost 2000s, but then it started dropping. But that doesn't really matter because this stock continues to make higher highs throughout time. So even if you buy that at peak, now you would be up in the position. It's all a long-term game of investing. For growth, you have to be willing to wait years, 10 years, 20, 30, 40 years, and everything should work out on your favor. As long as you do your own due diligence when it comes down to picking a good investment, good balance sheet. Oops, I meant good balance sheet. Sorry. Coca-Cola, let's look at this dividend. 2.82%. Dividend yield, annualized payout of $1.60. Payout ratio, 71.10. That's kind of high. Dividend growth of 57 years. But still not as bad as most other stocks. And Coca-Cola is never going to go away. And they're very prideful on their dividend yield and increasing it. So they have paid 40 cents per share. So overall, very good, safe investment. Let's go look at the next stock, Cincinnati Financial. This is the 6th stock. You might have never heard of this stock, but they have a market value of $13.8 billion, 2.7% dividend yield, 59 years of annual dividend increases, 1 buy, 0 overweight, 8 hold, 0 underweight, 1 sell. So this company is not that well known, but it has one of the longest streaks of consecutive annual dividend increases. So this stock is a property and casualty insurer. February 1, it announced that it will lift its quarterly dividend yields up 56 cents per share, the company's 59th straight year of annual increases. And let me tell you this, companies that are very prideful on their dividend raise streak, they're going to continue this at all costs. So you want to make sure you're investing in companies like this that are long-time dividend payers. Income investors can expect more where that came from. The increase in dividend increases the overall confidence, and it makes you guarantee pretty much income for the rest of your life. Now let's go ahead and look at the stock performance over time. Cincinnati Financial. Let's look at the MAC chart. It costs $107 per share that you buy right now. This is the 1 year, 5 year, and the beautiful MAC chart. There we go. So as you see, always making higher highs. I can pretty much guess that all these stocks have a good pattern like this. You'll never see a downtrading pattern of good companies that are making a lot of money and are doing really well in business. That's why a stock that has an upward trending max chart means that this stock is a very, very good buy. Let's look at the dividend data of Cincinnati Financial. It has a dividend yield of 2.12%, annualized payout of $2.24, payout ratio of 57.95%, which is kind of good. Dividend growth of 59 years. That is amazing. That's a long time. Now let's go ahead and take a look at the next stock. Well, actually, they pay 56 cents for every single share that you own of Cincinnati Financial. So overall, pretty solid. I love that it has a long history. That means they'll probably continue to pay that. Now for the seventh stock, we have Triple M. I'm actually up over $100 on this position. I have almost 20 shares now. The market value is $120.8 billion. Dividend yield of 2.80%. 60 years of consecutive annual dividend increases. 6 buy, 0 overweight, 11 hold, 3 sell. So Triple M, if you've never heard of this company, they make a ton of different products that a lot of industries use. So they're very diversified among a lot of different industries. I'll show you more information on this company. So now let's go ahead and take a look at the performance of the stock. This is the 1 year graph, so it's at a very big discount. It went from $219 to all the way to $150, and that's because of the issues they were having with trade war in China. Supposedly it was going to affect this company, but overall, since it has such a rich performance, and it always seems to go through difficult times, but it always recovers. This means that this company is resilient and will always continue to form this uptrending pattern as long as everything continues the same, which it probably will. Like I said, I'm up $100 on this position. That's because I've been buying the stock at a discount from its recent 52-week high. And if you keep on buying the lows, you're going to make a lot of money just from market capital appreciation, not even from the dividends, but the dividends is just something extra that I get to enjoy of the stock. It has a 3.25% dividend yield, 3.20, which is pretty good. Annualized payout of $5.76, payout ratio of 60%. That's kind of high, but it's not too high compared to a lot of different stocks. So I still feel very comfortable investing in the stock, especially after seeing that it has a 61-year dividend growth streak. That is pretty amazing. It always continues to be making higher highs and continues to pay that dividend. It's paying $1.44 right now, which is a pretty good amount, but you do have to spend $181 or $91 per share. So now for the eighth stock. This is Emerson Electric. It has a market value of $42.5 billion and a dividend yield of 2.9%, 62 years of annual dividend increases, 11 buy, 2 overweight, 11 hold, 0 sell. So this stock goes all the way back to making valves for heating and air conditioning to electric fittings. It's a very old company that is very focused on the energy sector, and this sector has been very beaten down through recent years, but it's starting to make a comeback, and this company has been continuing to pay dividends since 1956. So it's a very old conglomerate company that has a lot of market share in this industry, and that's why this stock continues to pay this dividend, because it still continues to have a lot of demand for the products even after 62 years. So let's go ahead and take a look at the technical analysis of this stock. Like I said, one of the best indicators of the success of this investment. So let's take a look at the max chart. So this stock is currently valued at $77.78. But just as we expect, this stock always continues to make higher highs.
and I would recommend you to buy when it dips a lot, like it did through a couple of times, because like I said, the stock always is making higher highs. So if you're able to get it at a discount, that is amazing, because it means you got a good value on it. And yeah, either way, if you're buying for the dividends, just hold it over time. That's exactly what I'm doing. So I'm trying to cover my living expenses with dividend payments, and that's my big focus right now. So that's why I love the stocks, because I have certainty in the stocks. They're always going to continue to pay this dividend, 2.57% dividend yield, annualized payout of $2. The payout ratio is 55%, which is good. Dividend growth of 63 years. That is outstanding. So I would feel very comfortable investing in the stock, as so should you, because of that streak performance. 50 cents per share, it recently increased it, just as we expect, so 49 to 50 cents. So yeah, that's pretty good. Good performance, good stock. Now let's get to the next one. This is Procter & Gamble, her ninth stock. This stock is the owner of a lot of great brands that people are always buying. 257 billion market cap and a 2.8% dividend yield. They got it started back in 1837 among the world's largest consumer products companies, so they're focused on consumer products. It boasts 22 brands that continues to make at least $1 billion in annual revenues, including always a feminine product brand, Bounty paper towels, Braun electric shavers, and they also own Crest, a dental company that competes with Colgate. So they're pretty big in the United States as well. It has been continuing to pay a dividend since 1980, so a very long time. Very old companies that still continue to adapt and evolutionize even through changes of consumer taste. So that's why you want to ensure that even though they're old companies, they still continue to evolve and get better over time. That's exactly what you need to be looking for companies that have been existing for a long time, because you want to make sure that they adapt to the new times. That's a big issue that a lot of companies have. The max chart performance, very, very good. Always making higher highs. If you were to buy the stock at any of these time periods, you're always going to be up on your position. You just have to wait a couple of months or even weeks, months. But yeah, so always growing. That's what I love about the stocks. So as you see, all these stocks pretty much have the same performance. That's because they're very, very good companies. Now let's look at the dividend information of the stock. 2.37% dividend yield, 2.98 annualized payout ratio of 60.37, and the annualized payout is how much they're going to pay you in a year of holding the stock. Dividend growth is 63 years, so really, really good. As you see, as we go to the 11th stock, they continue to pay that dividend for more years than the others. 74 cents per share that you own of Procter & Gamble. And yeah, so 74 cents. Now let's take a look at the 10th stock. We're getting really, really close to the 11th stock. Can you guess the 11th stock? Leave me a comment down below what you think it is, and then check back to see if you were right. So this is Genuine Parts, 15.9 billion market cap. It is best known for the Napa brand, though it also operates under Auto Todo in Mexico and UAP in Canada. Since its founding in 1928, it's pursued a strategy of acquisition to fuel growth, and it has been very successful at this strategy. It continues to be a big leader in car parts, which pretty much everyone always has a demand for. It has a streak of 63 years of continuing to increase and pay its dividends, so it's considered a dividend aristocrat and dividend king as well. Let's go ahead and take a look at the stock performance of JPC. So all you have to do is Google the stock and it's going to show you the Yahoo Finance chart. Let's look at the max chart, my favorite time period to look at any stock. So there we go. Always uptrending, always making higher highs. You couldn't be wrong by buying any of this stock at any moment in time, because it's always making a higher high. Let's look at the dividend. So I use dividend.com for this. Dividend yield of 3.00%, $3.05 annualized payout, 51.65% payout ratio. This is very good, and 63 years of annual dividend growth. you'll get 76 per share of every share that you have of the stock. So yeah, pretty good. And a moment of silence for the next stock. Alright, let's go, Dover. So you might have never heard of this stock, but they're actually huge. So basically they provide a lot of electronics that big stores use. So you've seen those refrigerators that are in stores. Dover is probably the manufacturer of them, and it has been doing really well at this. They sell very specific productivity tools for refrigeration equipment that's used in supermarkets. Do you ever think we're not gonna have a supermarket? So this is why this stock is always in demand. They're always gonna need repairs or need more parts or anything like that. And this is something that a store must have if you're selling refrigerated products. Yeah, so they've been a leader in this industry. 63 consecutive years of dividend hikes and continuing to pay that dividend yield. So a very good stock, and if you want to learn more about what the stock exactly does, you can do the research yourself. They're a very impressive company that has been a leader and has been continuing to pay this dividend yield for a very, very long time. Let's look at the chart just so that you take a look at it. So it's DOB, and we're gonna see the max chart. It's valued at $119 right now. So 1 year, 5 year, and the max. There we go. What a beautiful chart. Always making higher highs, just as we like. We like our money to grow, so I'm going to invest my money in companies that are always continuing to grow the stock price like this. Now let's take a look at the dividend information. Alright, so 1.64% dividend yield. This is kind of low, but it's still pretty good. Annualized payout of $1.96. 31.09% payout ratio. That is insane. Dividend growth to 64 years. That is the lowest payout ratio that we've seen. And it's crazy how this is the one that has the longest streak. 49 cents per share. So this means that this company is going to continue to do this forever pretty much. If they're able to have a 30% payout ratio, that means that they can increase this dividend yield by a lot, and they'll still be alright, and they're still going to have this position as the #1 stock to buy for the longest dividend history. Alright, so that's the 11 stock DOB. There we go, subscribers. Top 11 stocks with the longest dividend streak. These are the best dividend stocks that your money can buy. So make sure you check them out. Do your own research before buying into any of them. Let me know if you enjoyed this video and I brought value to you by showing you the stocks that are very good investments. Make sure you like the video as well. It really helps me out and it helps the video get to more people like you. Also, subscribe to the Flaming Profits YouTube channel. That way you do not miss out on any brand new videos. We're definitely going to see you in the next video. I have a very special surprise coming. So make sure you subscribe, that way you do not miss out. And leave me a comment down below. I want to know what your opinion of this video is. Do you invest in any of these stocks yourself? Did you know that they had the longest dividend streak? Let me know in the comment section down below. And I'll see y'all in the next video.